While India's stock market is on the cusp of a major milestone,
The bull run in the Indian market seems unstoppable.
Household finances have made a generational shift.
Number of demat accounts in India surged to a staggering 175 million.
Indian markets are buzzing with IPOs. Young investors with limited incomes and small savings are betting in the market and they're suffering heavy losses.
It is in fact has turned graveyards to millions of aspiring dreams.
So markets are touching record highs. But still, more than 80% of retail investors are losing money. I know this firsthand because I was one among those. I entered the markets with high hopes, only to face setbacks that taught me some of the hardest lessons of my life. But here is the good news. These lessons became the foundation for a turnaround. Back in 2007, I was just starting my career. Like many, I was drawn to the market during the bull run, thinking it was easy money. But then came the 2008 global financial crash.
Traders say this is the craziest day they have ever seen in these markets.
Industrial average dropped more than 900 points.
Fear came back into the market in a very big way.
And I lost nearly everything, including my parents' savings. That experience shaped how I approach investing today. And now, I want to share the lessons that helped me turn things around. If I could do it, so can you.
Let me ask you a question.
Do you think we are in a similar bull cycle now as we were in 2003 to 2007? So do you think the market will crash anytime soon? Please let me know in the comments. Coming back to the topic, so here is the secret they don't tell you. It's not the market, it's the strategy. Let's uncover 3 strategies to grow your wealth steadily and avoid common mistakes.
Are you tired of stock tips that don't work?
Do you remember the good old days? Back then, if you wanted market tips or stock insights, you had to be part of exclusive mail groups or active on platforms like Orkut or Facebook. Fast forward to today, everything has changed. Social media has revolutionized how we access market advice. Now tips are everywhere. Instagram, Twitter, YouTube, you name it. With just scroll or a tap, you're bombarded with recommendations. Between 2020 and 2024, India saw a multi-fold increase in retail investors. And you guessed it, the rise of finance influencers on social media.
Flow of FDIs, which is remaining unabated.
The rapid rise of these finfluencers, as they're known, coupled with a lack of regulation, has created opportunities for scams and exploitation.
I cannot say I'm doing education, but I'm claiming that my students make 5 crores a year.
But here is the question. Has this abundance of information made investing easier or riskier?
Let me take you on a journey. Imagine this. The Indian stock market has transformed dramatically over the past 15 years. Buckle up as we dive into the facts behind the numbers and uncover what they mean for you. Picture this. It's 2008 and the global financial crisis hits like a thunderstorm. The Nifty reaches a peak of 6,000, but then, for 6 long years, the market goes sideways, teasing investors with little action. But then, 2014 arrives, bringing new hope and momentum. From this point onward, the Nifty embarks on an upward climb, doubling by 2020 to reach a peak of 12,000 odd points. Now it's March 2020. The world is paralyzed by the pandemic. Lockdowns, economic uncertainty, and the looming threat to life send shockwaves through the markets. On March 24, the Nifty crashed to its low, plunging by a jaw-dropping 40% from the peak of Feb 2020, the lowest point in years. Panic grips investors as portfolios evaporate. What follows is nothing short of spectacular. Post-COVID, the Nifty embarks on a rally for the ages, a relentless march upward with barely a glance back. From its Feb 2020 peak, the index more than doubles, and from its pandemic era bottom, it has tripled, soaring to new heights. This rally doesn't just make headlines, it changes lives. Investor wealth multiplies manyfold. Retail participants flood the market like never before, driven by quick gains and stories of overnight millionaires. Let's rewind to a time of optimism and momentum. Between 2014 and 2016, India's economy was firing on all cylinders. Growth rates soared, peaking at an impressive 8.3% in 2016. This was a period marked by robust reforms and strong investor confidence, with mid-caps doubling in 4 years from 2014 to 2018. But every boom has its pause, and the Indian economy began to slow down. By 2019, growth had dipped to 3.9%, the lowest in years due to transformational policies like the GST and demonetization, which disrupted the economic flow, creating temporary bottlenecks. While these changes were aimed at long-term benefits, the short-term impact was undeniable. Then came 2020, the year that changed everything. The COVID-19 pandemic struck, bringing the world to its knees. Indian economy was no exception, contracting by a staggering 5.8%. Lockdowns, health crisis, and global uncertainty created a storm that felt impossible to weather. For the first time in decades, the economy shrank. By then, mid-caps have corrected by 50% from 2018 peak. But India is no stranger to resilience. By 2021, the economy roared back to life, achieving a stunning 9.7% growth, one of the fastest rebounds in the world. The momentum continued with 7% growth in 2022 and 8% in 2023, fueled by structural reforms, increased foreign inflows, and a renowned push for economic innovation. This wasn't just a recovery, it was a testament to India's ability to adapt and thrive against the odds. But here is the game changer. While the Nifty's meteoric rise captured headlines, something even more extraordinary unfolded in the mid-cap segment. Since 2020, mid-caps have tripled from their highs and delivered a jaw-dropping 5x return from the COVID lows. Yes, you heard that right. A 5-fold increase. This wasn't just a rally, it was a phenomenon. For investors who had the vision to bet on mid-caps during those uncertain times, the reward has been life-changing. High risks come with high returns. Small caps fell the most during uncertain times and during COVID panic. But when there was exuberance in the market, it delivered much better returns than Nifty and slightly better returns compared to mid-cap. It was a classic tale of risk versus reward. But here is the thing about bull markets. They make everyone look like a genius. From 2020 onwards, almost any stock you picked would have gone up. But does that mean everyone's an expert? Not quite. As the saying goes, any Tom, Dick or Harry can make returns in a bull run. But the real test comes when the tide turns. When the going gets tough, the tough gets going. Markets are a marathon, not a sprint. Now you might be wondering how to play this story. For example, before buying a product on Amazon, we check reviews, ratings, and even the seller's credibility, right? Similarly, before following a stock tip from an influencer, or from anyone for that matter, check their track record, how long they've been an influencer, and how their performance has been with their suggestions. Have their past recommendations performed well? This small step can save you from big mistakes. Now that we've covered the first strategy, let me give you a sneak peek of what's coming next. The second strategy focuses on maximizing your profits, and the third strategy is all about limiting your risks. I'll cover both in detail in the next video. If you found this strategy useful, wait until you see the next two. They build on what we've covered today.